Is the Pramerica Life Smart Wealth Plus plan truly the smart way to build wealth and ensure your future, or just another ULIP with glossy features and hidden trade offs? Let us find out the answer to this question through an in depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So, this is a unit linked, non participating individual savings life insurance plan. So, some of the key features of the policy are: you have the flexibility to choose between regular or limited premium payment terms. It is designed to help you build wealth for your life's key milestones, and loyalty additions are rewarded through persistence units, and you have access to 10 fund options, each catering to different risk and growth preferences. So, fund conservation option to help protect your fund value during market volatility is also available. So, these are some of the key features of the policy, and there are benefits like death benefit, maturity benefit, and persistency units. So, there are 10 fund options from which you can choose any fund option based on your risk tolerance, financial goals, and the time horizon for them, and invest accordingly. But as a unit link policy, there are also several charges they charge you with, like premium allocation charge, policy administration charge, mortality charges, fund management charges, discontinuance charges, switching charges, partial withdrawal charges, and miscellaneous charges. So the plan charges are relatively high compared to other market linked investment options. So these charges also apply throughout the policy term, which reduces your investable premium and consequently lowers your overall returns over time. So we need to consider this as a drawback. Now let's take a look at the advantages. So you can switch your investments among the available funds based on your financial goals and investment preferences. The premium redirection feature allows you to adjust the allocation of your premium across different funds as per your changing needs. Partial withdrawals are also permitted only after completing 5 policy years, which serves as a lock-in period. So at maturity, you have the option to receive your maturity benefits as structured payouts spread over a period of up to 5 years through the settlement option. So these are some of the advantages. However, there are some disadvantages like no loan facility available under this plan. The returns are relatively low compared to other investment options, and the sum assured is inadequate to provide sufficient financial protection, and there is no liquidity during the first 5 policy years. So the policy term is fixed at 20 years, offering no flexibility in duration. So these are some of the drawbacks that you need to keep in your mind before deciding to invest in this policy. So now, as we have a basic idea about this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis based on the benefit illustration given in the policy brochure to help us make a more informed decision. But if you still want to know more about certain aspects of the policy in detail, you can refer to the policy brochure. So here we are going to assume, for calculation purpose, that a 35-year-old male has purchased this plan with a sum assured of 10 lakhs, opting for a 20-year policy term and a 10-year premium payment term, paying an annual premium of 1 lakh. So if all the premiums are paid regularly, the maturity benefit will be the fund value at the end of the policy term. Here in the policy benefit illustration, they have assumed future investment returns of 4 and 8% per annum, which are not guaranteed, and this is just to serve as hypothetical projections. Here, just for an example scenario where how this policy will perform at worst and best case scenario. So on that note, we are going to calculate the IRR based on these assumed returns. So at a 4% return, the fund value is projected at 13.08 lakhs, resulting in an IRR of just 1.74% as per the policy's maturity calculator, which is lower than a typical savings account interest rate, and an 8% rate. The fund value increases to 24.08 lakhs, giving an IRR of 5.75% as per the policy's maturity calculator. However, this return does not adequately compensate for the market risk taken. So, investors generally expect equity linked products to deliver inflation beating returns and generate alpha over time. Unfortunately, the potential returns from this policy are not even comparable to debt instruments, making it unsuitable as an equity investment within your portfolio. So, now as we know that this policy is not giving us the desirable outcome that we need, let us now move on to a comparative analysis where we are going to take up an alternative approach. So, Pramerica policy combines life insurance coverage and investment. So, for a fair comparison, we are going to separate these two components with the same parameters just to see whether separating them would give us efficient returns. So, here for life cover purpose, we have taken up a pure term insurance policy with a sum assured of 10 lakhs, which costs us around 7,500 rupees as premium per year for a 20-year term with a 10-year premium payment period. So, this allows you to save 92,500 rupees annually, which can instead be invested elsewhere. So, depending on your risk tolerance, you could offer either equity, which is high risk, or debt, which is low risk investment options. So, here on the tabular column presented on the screen, we have shown you both cases, like both combination with PPF and equity mutual fund. So for low risk option, we have opted for PPF with a 15-year investment period and minor adjustments in the final year. The maturity value after 20 years works out to be 27.29 lakhs, giving an IRR of 6.58%. Next, in combination with term insurance, we have taken up a high risk option as an example, which is equity mutual fund. So over 20 years, the fund value has grown to 56.46 lakhs. After accounting for capital gains tax, the post-tax maturity value is 50.72 lakhs, resulting in a post-tax IRR of 10.74%. So if you have any doubts regarding how we have calculated tax for equity mutual fund, you can see that we have presented a small tabular column on the screen for your easy reference, which you can pause and see. So both these alternatives outperform the Pramerica policy by a wide margin. Their returns comfortably beat inflation, ensuring faster wealth creation and greater financial growth over time. So separating insurance and investment is a smarter strategy as it delivers higher returns, better liquidity, and greater transparency compared to bundled ULIP products like the Pramerica policy. So what is the final verdict then? Is investing in the Pramerica Life Smart Wealth Plus plan worth it or not? So this policy provides multiple fund options catering to different investment preferences, and the final maturity value, including persistency units, is paid out at the end of the term. However, these fund choices don't offer substantial value because the returns are relatively poor for a long-term investment. The high charges associated with the plan are the primary reason for its underwhelming performance. Ideally, a market-linked product should enable long-term wealth creation, but the policy fails to deliver on that front. Moreover, the sum assured is insufficient, further reducing its effectiveness, and it also has a high agent commission. The combination of low returns, limited flexibility, and inadequate coverage makes this plan unsuitable for your investment portfolio. Never combine insurance and investment in a single product. As discussed earlier, separating the two allows you to get optimal benefits from both. Choosing a pure term life insurance policy ensures adequate protection, while investing separately in products aligned with your risk appetite, financial goals, and time horizon helps you build real wealth. If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.